Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Tim, let's get to one stock that is definitely on our radar big time.
Yeah, that's Starbucks. The stock's soaring the most ever on an intraday basis as the company's board orders up a half-calf latte with a new CEO. And that CEO is one well known to the fast casual space and with riding a ship that's got some pretty big issues.
It's an individual that's really well known to us. It's Chipotle CEO Brian Niccol. We've talked to him a lot. Named to the top job at Starbucks, will take over as CEO on September 9th, replacing the existing CEO who was ousted after less than a year and a half at the helm. Through Monday, shares in the coffee chain had plunged 20% this year, following 2 straight quarters of comp sales decline. Shares of Starbucks, though, right now are up 22% today. So let's get into it with Bloomberg News consumer reporter Deena Shanker here in studio. And also with us is Bloomberg Intelligence senior credit analyst Jody Lurie in Bloomberg Intelligence headquarters out in Princeton, New Jersey. Deena, I want to start with you. To the news. What do we know? What does this mean for Starbucks? And what the Chipotle CEO, who will soon be the Starbucks CEO, Brian Niccol, brings to the table?
Well, one analyst called him a dream hire for CEO, I believe was the quote.
Interesting.
He really turned things around for Chipotle, and Chipotle is just outperforming the rest of the restaurant industry. So if you're sitting in a boardroom of a restaurant company and things aren't looking so good and you're like, who can save us? He would probably be at the very top of the list. So that was a great hire for them. And he's someone who's also had to deal with a company that was under stress for many years, had to beef up their digital strategy, and came to the company, I'm thinking about Chipotle, just as the pandemic was hitting. And so he really had to learn how to kind of shift the ship, if you will, at Chipotle. And he's kind of got to do some of that here. Yes, definitely. I mean, one thing that all of these restaurant companies deal with is productivity and how quickly can they turn an order into food and put that food into a customer's hands. And Chipotle has really improved on that. Starbucks really needs that kind of improvement. So I expect that that is going to be a big priority for him once he takes the job.
Hey, Jody, come on in here. And just because Brian Niccol was able to succeed so well at Taco Bell before going to Chipotle and then totally exceed expectations, I think, of a lot of investors of Chipotle as well, doesn't necessarily mean he can do the same thing at Starbucks. What are the challenges that he faces at Starbucks, given the environment over the last couple of years?
I think there's actually quite a few challenges that they're facing. I mean, first of all, they have a reputational risk, right? They've gotten hit by different headlines over and over. So first you had the union issues. Then you had the grassroots effort to sort of, rake Starbucks through the mud as it related to Middle Eastern conflict. And then you now have China, which was sort of their investment arm where they were kind of going to next. And so all these sort of components just ended up in not the best situation for them. So I think what they're really hoping is that he will provide that espresso shot that they're hoping for, that the prior CEO didn't quite get a chance to do over the past year and a half.
Jody, what does the Starbucks balance sheet look like?
Starbucks balance sheet, so taking a step back, the company, went through the pandemic, like all other companies, took on a bit of debt to have a little bit more cash going through the pandemic. And once the pandemic ended, they focused on deleveraging. They got leverage below 3 times, which was their target. But now the expectation, if you look at MODL on the terminal, the expectation is that it will hit to 3.4, 3.5 times by the end of the fiscal year, which is September. So definitely a reversion from where they were in terms of improving the balance sheet. That said, it's not a company that we're necessarily worried about at the moment being a triple B company, but it could be an issue as activists get involved and as management sort of gets creative in how they turn the company around.
Okay, so let's talk a little bit about how the company gets turned around, Deena, and think about this from the perspective of, a company that I think for a lot of people over the last 30-ish years reinvented the way that coffee was consumed and delivered here in the U.S. At Taco Bell, Doritos Locos Taco, at Chipotle, did a lot, as Carol mentioned, with digital. Starbucks already has a robust digital platform, and it has for years. There's the China element, too, and the weakness that they've seen in China. What are the challenges that he has to overcome to turn Starbucks around?
So one thing that I think is particular to Starbucks that he has to think about is that one of the ways Starbucks really differentiated itself out of the gate was they were going to be committed to high quality coffee when they started to branch out into lots of other things like music and movies and teddy bears in the restaurants. Howard Schultz came back and said, we're a coffee company. We're going to focus on coffee. We've now seen them once again branching out into lots of other things. They have lemonade refreshers. They have energy drinks. But a lot of people like those. So I am really curious to see how new management what direction they want to go in. Do they want to go back to basics, what worked once, or do they want to see what's working now and then maybe cut the fat? I don't know. We'll just have to wait and see.
New management, but yet they've got someone who has been associated with the company for a long time, and I'm thinking about Howard Schultz. He's not on the board, doesn't have a board seat, doesn't have a formal role with the company, but he's Starbucks' sixth largest shareholder, and obviously, this is his company. And for better or for worse, perhaps, his involvement, is that a good thing for him to still, in terms of understanding this company? Or is this a case where you have to have an outsider who understands Deena, the fast casual space, kind of do his thing? Bring in some new blood.
I think the real question is whether a new CEO wants to stand up to Howard, because just as an outside observer, it seems like Howard really likes to share his opinions on the company.
And come back to the company.
And come back and return over and over again. And so, they hired someone really strong. So hopefully Howard will take a hint and keep some opinions to himself, or at least give them a chance to run with some things.
And apparently Howard Schultz had told Melody Hobson, who was on the Starbucks board, that I guess she had told him about a week ago about her decision for Brian Niccol, and that Schultz apparently said, Melody, that's a home run. So he seems to like it. Jody, how do you think about this company? Obviously you focus on the balance sheet, understanding the finances and kind of what needs to be done there, but it all goes back to management and how they manage, and that will ultimately play out in the balance sheet. How do you think about the leadership of Brian Niccol, maybe what he did at Chipotle and what he can maybe do here or has to do here?
So I think we have to take a step back and think about when he was actually at Yum, right? He was the Taco Bell CEO. So granted, he was not the Yum CEO. He was not at the helm. However, he did ride through the spin-off of Yum China. And I can't say that that's necessarily the direction that Starbucks is going. We didn't see that at Chipotle, but it is something that sort of lurks in the back of my mind of, okay, what's management going to do? And if you remember what happened with Yum, not only did they spin off Yum China, but they took that cash and gave it to shareholders. Now, Starbucks, before this, going into this, had a 3-year plan of giving back to shareholders $20 billion. And they had the cash flow for it to some extent, but you also thought, okay, some of it might be financed with debt. And so I think my question is do they pull back on that and go full on CapEx? Do they get creative with how they sort of deal with licensed versus owned stores, their international business versus their domestic? I think there's a lot of different avenues that he can look at. Never mind, of course, the transition into things like Doritos Locos breakfast sandwiches. I don't know.
I was thinking the Doritos Locos latte. It doesn't really have
latte,
the same ring
Doritos
to
Locos
it, right?
latte.
Yeah, I'll pass. I'll take the coffee upstairs. All right, guys, we got to run. Thank you so much. Bloomberg News consumer reporter Deena Shanker and Bloomberg Intelligence senior credit analyst Jody Lurie. Shares of Starbucks hovering near their best levels of the session, up almost 22%. On the flip side, you've got Chipotle, Mexican Grill, off its lows, but Tim still down about 7%.
Yeah, it was down as much as 14%. Scott Boatwright, the COO, was named Chipotle's interim CEO. So we'll follow that company and let you know any developments there when it comes to their executive suite.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
In Nantucket, there's a growing sense that the roughly 50 square mile island has become a casualty in the push for cleaner energy. So any accident, however minor it might be, involving the nearby farm was bound to become a flashpoint in the broader fight over wind.
And that's exactly what has happened. Here to talk more about the Nantucket rage over a broken wind turbine blade is Bloomberg News energy and climate disasters reporter Josh Saul. He's here in our studio. Before we get too far into this, remind everyone what happened a few weeks ago on Nantucket with this accident.
Will do. And I just want to mention to everyone who can't see me, I did wear my Nantuckiest sweater.
I was going to say.
Here today. It's pretty good, right?
It is pretty good. It was
in my desk.
No Nantucket red pants, though.
That's true.
Do you have docksiders
That would be
on?
a whole other step. Nope, just the Solomons, just the dad shoes.
Okay.
So exactly 1 month ago, one of the blades on the Vineyard wind farm. So this is a big wind farm. It'll eventually be 62 wind turbines, each as big as the Eiffel Tower with the Statue of Liberty on top of them. One single blade fell apart and fell into the water, and pieces of that were floating in the water. Pieces of it eventually washed ashore on Nantucket, and created a real uproar on the island.
What happened though? Beaches closed? What kind of?
Beaches closed for a very short amount of time.
Okay.
People on the island were very angry. They likened it to an oil spill. It was almost like Jaws approaching the beach, like just a really big deal. And the federal government shut down both construction and electricity generation at the Vineyard wind farm, which is still ongoing.
Okay, you're from Alaska. I'm from California. We've experienced oil spills in our day, geographically. Was this environmentally on the same level as an oil spill?
So far, it seems to be a lot smaller impact. It definitely freaked people out, but we don't have any reports of dead animals. They're, in comparison, solid chunks of fiberglass are a lot easier to clean up compared to oil in terms of the way it spreads, the way it sinks. Mm-hmm. So yeah, it seems like a much more small scale failure compared to an actual oil spill.
Couple of questions. I mean, how often are there accidents with wind farms? I'm just curious about the frequency of it. And also, how important, though, are these wind farms to power on the island, in the region? How important are they?
Yeah, so wind backers, the clean energy advocates, view these as extremely important because what they're going to be doing is they're going to be sending clean energy, so carbon-free energy, to the shore, kind of at exactly the times, like windy periods of the day, mm-hmm. is when the grid really needs it. So you can have solar on land producing a lot of energy, obviously in the middle of the day when the sun is up, but wind offshore can be sending energy in the morning, in the evening, and at night when that solar power isn't available. So it's seen as a really important part of the transition.
Josh, is it powered just to the island? Is it to other areas? I'm just curious how far this stuff goes.
Actually, the undersea cable will bypass Nantucket and Martha's Vineyard, kind of running right between them to the mainland, powering the equivalent, according to the companies, of about 400,000 homes. I mean, these things can produce huge amounts of energy. So instead of the natural gas plants or other fossil climate mm-hmm. changing types of generation on land, we would have the offshore wind, these clean electrons right. flowing there.
A big part of your story that you wrote along with Cam and the team at Bloomberg News has to do with the implications of an accident like this on other wind farm projects throughout the United States that are planned for the future. Talk a little bit about what's being planned right now, some community pushback to these, and what it could mean to have an accident like this.
That's exactly right, because under Biden, who set a very aggressive offshore wind target of 30 gigawatts by 2030, there are a lot of of a total of 8 projects in development, something like 13 gigawatts, coming on, and you can imagine, a gigawatt is about how much a nuclear reactor produces. So it's a lot of clean energy coming on. But Vineyard Wind is really seen as kind of the marquee, like kind of the first big project. There's been some very small pilot projects. There's a smaller wind farm off of Long Island built by other developers, but this was seen as kind of the first like utility scale, like it produces as much power as a big gas plant. And the worry is that even these kind of relatively small hiccups like this produce so much anger, produce so much pushback against this new energy source that, especially with a Trump election, he could, as he said, come in on day one and kind of drastically change the landscape for these big projects.
I was thinking about that, how the outcome of the November presidential election, whoever is in the White House, that might determine the future path when it comes to wind energy, wind farms in the future, the growth of this industry. Or has the kind of horse left the, the stable already?
The way we think about it, projects that are already permitted and in construction would be a pretty big deal for anyone, even a president, to sort of tear out of the seabed. But projects that are still have any kind of permits left to get, not particularly hard for a federal agency to drastically slow down or even stop that process. Trump said at a big rally in New Jersey, like, I would stop all this on day one. The worry with this is that the worry with incidents like this is that it just kind of makes it more at the forefront, more top in his in his mind or in his administration's mind. And just as Biden used presidential powers once he got to office to slow down or stop offshore gas and oil drilling, Trump could conceivably do the same thing with offshore wind.
One thing that I was thinking about in reading your piece, Josh, is that there's kind of no free lunch or no silver bullet when it comes to solving the energy needs in a renewable way here in the US and around the world. It seems like there has to be, with every project, some sort of give and take with a community or with a location.
I think that's exactly right. No free lunch, no free energy. Like, there's trade-offs with all these projects. Like, you build, even what we think of as, a big solar farm in the middle of the desert. That's great. People who live nearby in Arizona are mad about, all the desert tortoises being killed by the construction. And they're also like, hey, we like to ride our horses around here. It's more fun to ride your horses when it's not a solar farm. Like, basically anywhere you want to build energy, there are these trade-offs. And that's one of the conservationists we spoke to on Nantucket, who said, by the way, this has completely turned the tide, but completely changed how the island feels about it. Like, the island is pretty united against offshore wind, at least right now. And he said there's trade-offs and there's benefits and costs with any energy source.
Where does this leave Vineyard Wind, right? This is the company behind the wind farms. And I also do think about oversight, right? You don't want these things to fall apart. You want them to work. Just like if you build a nuclear power plant, you don't want a meltdown. You've got to make sure that there's oversight. Is there enough oversight, or is it a company issue? What was it? And we just got about 30 seconds here.
Vineyard Wind and then the turbine maker, GE Vernova, have been very active about both cleaning up debris and also checking turbines to make sure this doesn't happen again. This could change some oversight or the amount of money that companies have to put forward.
All right, something we're going to keep a watch on. Really good stuff, and the sweater, totally in on it.
Appreciate that. Thank you.
Josh Saul, he is energy and climate disasters reporter here at Bloomberg News, joining us here in studio.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, our Bloomberg News colleague, Will Wade, writing this week that even as temperatures on Earth smash new records and scientists warn the climate is reaching dangerous tipping points, the amount of coal being consumed keeps on growing. The basic problem is simple. Whenever the security of electricity supply is in doubt, Will writes, the imperative to contain global warming slips down the agenda. Coal, we should note, is the biggest source of electricity. It accounts for 35% of the world's generation in 2023. That's according to Ember, a climate think tank.
All right, so Randall Atkins knows all about this. He's founder, chairman, and CEO of Ramaco Resources, a publicly held $650 million market cap company that produces metallurgical coal. It's the type of coal used in steel making. Company is also, in their words, exploring domestic production of rare earth elements, which is what we are super interested in to hear a little bit more about. Randall joins us from Bluefield Coal Symposium in West Virginia. Randall, great to have you here with us. What, you want to keep it up?
I just want to start with the nuance here because and this is what I wanted. This was a really important conversation that I had with Alex Steele ahead of this interview because I don't talk about coal every day.
No, you don't. But you guys were going head to head.
I did some research. I talked
to
Alex. Randall, there's important nuance here. I talked about electricity generation in my intro, but because that's when we talk about coal that's used for electricity generation, we're talking about thermal coal. You produce metallurgical coal. So explain the nuance here.
Sure. Well, as we say, first of all, we actually have come up with a new name. We don't call it coal; we call it carbon ore, because we essentially approach it as to what its use is being from an underlying perspective. So you're absolutely correct. There's sort of three legs to the stool, as we call it, for coal use. One is obviously for combustion and power. One is basically to make steel used in blast furnaces. And frankly, the third and somewhat less understood use is what we call advanced coal products and materials, which also include critical minerals and rare earth. So that's sort of what we've been paying a lot of attention to for about the last 12 years.
Randall, can all coal be each of these three?
So in a simple answer, all coals are not created equal.
Good.
So they're distinguished by chemical properties, and the chemical properties then somewhat dictate their best and highest use. But what we've discovered is, at least for the third use, coal to advanced carbon products and materials, those can be made from either thermal or met coal.
Okay, so let's move to rare earths and talk a little bit about what's going on in your mine, where you acquired it for several $1 million, but there was this fascinating story in the Wall Street Journal back in the fall about how if everything sort of goes in your direction, there could be tens of billions of dollars worth of rare earths in that mine. What's going on there?
Well, it's the greatest expression, it's better to be lucky than smart sometimes, isn't it? So we bought this old thermal coal mine, and frankly, it took about a year and a half to figure out that making a new thermal coal mine for utility use was somewhat of a losing proposition to deploy capital on. So we pivoted and frankly took a technology route to try to figure out what else coal could be used for. That brought us into touch with a couple of the Department of Energy national labs, and they worked with us on not only carbon products, but we're exploring, frankly, on behalf of the Defense Department, where rare earths might be found in the U.S. There's always been a thesis that they could be found in coal, but it had never been shown or proven. So we sent them some samples, took them about a year and a half. Lo and behold, they come back and said, look, we found higher concentrations of rare earths in your deposits than any place we've seen outside of Western China. So that's put us on this odyssey to where we stand today, where we're hoping to actually be in a position to start a demonstration facility next year to actually go into production and refining of rare earths that we already have a permit on that come from coal and the carbon material sort of around it. Most rare earths comes from hard minerals, uraniums, cobalts, lithiums, which frankly are radioactive when you mine them. And so that's why all the rare earths, frankly, are sent to China for processing, which is sort of self-defeating. So if we're able to actually produce rare earths from coal here in the U.S. and process them here in the U.S., that's going to be a distinct advantage.
Randall, I'm wondering if it's fair to say that if everything goes according to plan with the mine that could have rare earths, would you move away completely from traditional coal mining?
Well, I think the interesting thing is it's frankly one and the same in our case, because we're mining the coal to get to the rare earths.
So, explain how that processing exactly works. I know you mentioned that it had to be previously sent to China, but how do you pull it off here in the U.S.?
Sure. Nothing simple, but the way it works is we basically mine the coal. The rare earths are actually contained in minerals in the coal. So what we would do is then process the rare earths out of the coal by, frankly, a pyrolysis or a heating process, and then do various forms of separation. So in essence, even though we're still in the coal mining business, the end product is really rare earths.
I'm looking at a stat that says China produces 60% of the world's rare earths, but processes nearly 90%, which means that it's importing rare earths from other countries and processing them. So what you're saying is we not only have to produce them, but we have to process them. That's really important. What I'm curious about is what's the potential of your mine? What's the cost to bring it to potential? And what are the guarantees that you can actually spend the money and get to that potential?
Sure. Well, to kind of break it down, what you do in a mine of this nature is you go through a fairly complex techno-economic analysis, which, breaks down not only the mining, but also the processing and refinement and, discover what each part of that component production costs. We'll have that prepared by the end of the year with Fluor and Company, who's kind of advising us on that. We've got a pretty good sense of it right now, so we know that we think it is commercial. We obviously want to get down to the detail because before, as a public company, we start throwing numbers out. We want to have some independent confirmation. But we think it will be commercial, basically, even at today's prices, which are a little bit manipulated by China, who tries to keep all the competition off the field. And if we're able to do this and process it in the United States, needless to say, becomes very important strategically because, frankly, as I was just saying to this group here, when the Defense Department needs to get rare earths for our hypersonic missiles and drones, they unfortunately at this point have to call a procurement office in China. So that doesn't always work out quite well. So
what's the potential in terms of this mine and what it might produce and what it might be worth?
Sure. So I think the initial numbers we have were that it got probably north of 1.5 million tons of rare earths, which are concentrated mostly in the heavy and medium magnetic rare earths, which are the more valuable. For some context, the U.S. uses only about 10,000 tons a year. So if we've got 1.5 million plus, it's a long-term supply.
Right.
So I think that's the critical advantage that the government is trying to incent us to pursue this mine, because it could solve potentially a lot of supply problems. And then in terms of the ultimate value, needless to say, rare earths sell for a great deal more than a ton of coal. Some of the critical minerals and rare earths we've got sell for around $1 million or more a ton. So compare that to coal that sells for thermal purposes out west for $15 a ton, or even metallurgic coal for, say, $200 a ton, and you get kind of a sense.
Hey, Randall, we're talking a lot about the government, and one thing that comes to mind is what a change in administration would mean for your company. How are you thinking about the election?
Well, needless to say, in general, as somebody who's a student of the coal industry, times were a little bit more comfortable under Republican administrations than they have been under Democratic administrations. I would say, the main pushback, of course, against coal is its use as a combustion fuel. There's less pushback for metallurgic purposes, and frankly, for rare earth purposes, there should be none at all. And I think the interesting thing, administrations may come and go, but as far as the strategic requirement, particularly for rare earth, I think that cuts across political boundaries. So, obviously, we're already permitted. We're in the process of, starting our initial development, and we'll deal with whatever political landscape is out there.
Hey, Randall, the elephant in the room here, and I kind of opened with this, is climate change, and it's known that coal is the dirtiest of fossil fuels, and I'm wondering how you think about that in terms of, quote unquote, clean coal. How do you make burning coal release less emissions? Is that possible to make clean coal?
Yeah, well, we basically have come up with, a lot of one-liners, one of which is coal is too valuable to burn, another which is what we call the cure for coal. And essentially the cure for coal is that you've got to do several things at once. You've got to basically have a solution that speaks to the decarbonization of the commodity. You've got to do something that basically, supplies the value proposition or greater than it does now, and you need to be able to supply that in volumes that, make it sense for the coal business. That's why we've kind of turned to this use of coal as a precursor to make advanced carbon products and materials. These are things like graphite, synthetic graphite, graphene, carbon fibers, a lot of things that historically have been made from petroleum, but you can make them chemically from coal, and you can make them from coal at a vastly lower price than using petroleum. The interesting stat is that there's the same amount of carbon in a ton of coal as there is in a ton of petroleum. A ton of petroleum is like 7 barrels. So
Wow.
you use $80 a barrel, you're at $540 for a ton of carbon versus 15 for coal. So when you think about use of things like carbon fibers, which have properties that are frankly superior to steel in terms of lightweighting,
Okay.
of course, that type of thing, it's a fairly compelling economic argument to use coal.
All right. We certainly could continue. There's lots more, certainly when it comes to environmental impact, but hopefully next time. Randall Atkins, we hope we can continue this conversation. Founder, chairman, and CEO of Ramaco Resources. This is Bloomberg.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, 18 minutes or so to go until we wrap up the
Freaky Friday.
No, it's
not Freaky Friday.
I don't know. I don't even know what to call it.
Taco Tuesday.
I'm looking for a Taco Tuesday.
Yeah.
Thank you so much. Thank you, Chipotle. Moving on to Starbucks. All right. We're pretty much hovering near our highs of the session. We've seen investors move into both stocks and bonds, which doesn't typically happen, but here we go on this Taco Tuesday. So let's get to it with Aaron Kennon, co-founder and CEO over at Clear Harbor Asset Management. They've got $1.5 billion in assets under management, joining us once again from Stamford, Connecticut. Forgive us. It's a little bit of a wacky day. Aaron, how are you?
I'm doing just fine. Thanks for having me back.
It's
Hope
always
you're both doing well too.
We're hanging in there. The recent bout of volatility, a week ago or so, we would have been having a very different conversation, the three of us. Was that volatility that we saw 1 week ago yesterday noteworthy or to be considered expected, considering the run-up that we've seen in the overall equity markets and in particular in some specific names?
Well, that's a great question, Carol. I think at the end of the day, we're at a point of transition on a monetary policy front, and we may be at a point of transition on an economic growth front. And we know what we saw a week ago was a huge sort of shuttering of markets, and really what sparked that was a major transition in monetary policy in Japan. And I think that while our economic picture is decelerating, there's hope for a soft landing. We've seen nice disinflationary trends, which are now leading the market to conclude that the Fed is going to cut rates in September. There were even calls last week in the middle of the spike in volatility to 65 on the VIX for the Fed to cut intermeeting. But I do think the Fed should cut, and I think they should probably start when they said they will, which will be September. And I think where maybe there's some nuance that may be helpful to ponder is the degree to which the US dollar relative to the yen could trigger another round of yen unwinding, yen carry unwinding. And certainly monetary policy officials would not welcome that, and neither would investors. And so that leads me to think that maybe the Fed cuts in September, but it's a much more gradual cut unless the economic data really surprises significantly to the downside here in the U.S., so as to not, have a huge gap between rates in Japan relative to the United States, and therefore have the yen be in a position where we'll really appreciate quite significantly. We had a nearly 11% appreciation in the yen just over the last couple of weeks, and I think that was, to a great extent, what has triggered so much of that volatility that we saw last week.
Hey, Aaron, when you say gradual cuts, do you mean 25 basis points in September and then maybe two more 25 basis point cuts, so you have 75 bips by the end of the year?
Yeah, and again, I'm sort of making this point that if the Fed is of the view, which I'm sure they are, that yes, they have a dual mandate, but they have to think about what happens to employment and what happens to pricing if volatility were to spike, if investors were to become rattled, if consumers therefore were to become rattled as well. And so while I would be in the camp of, without having to worry about the yen unwind, if that were not an issue, or global capital markets more generally, of maybe a slightly more aggressive approach to cutting rates over the next quarter to two, maybe they'll perhaps be taking their time so as to not alter this sort of relationship in dollar yen to any great degree going forward. We know the Bank of Japan essentially signaled to the market after the 12% slump in the Nikkei in just one day last week that maybe they'll be a little more cautious. They won't hike rates as aggressively, and so that was an interesting marker across the pond for sure.
So I am curious, Aaron, are pullbacks opportunities to buy, or are they time to rethink kind of your asset allocation?
I mean, I always think, when in the context of an overall sort of multi-asset class portfolio for the types of clients that we manage money for here at Clear Harbor, sort of the high net worth, ultra high net worth, non-for-profit clients, you always want to know what's your target allocation? Are you under that at the position level, at the asset class level? Are you over it? Is there a time to sort of rebalance? And oftentimes when there's a market swoon like that, it's a time to sort of think about, adding to things that perhaps you were slightly underweight. It's also a time to think about, correlations. When volatility rises, things tend to correlate again, particularly on the day when that spike occurs, but to sort of think about correlations during times of uncertainty, but also during times of normalization. And so I think, going forward too, what we believe to be the case is, on the fixed income side, maybe moving duration a little further out the curve. I think a lot of fixed income dollars with individuals and even some institutions is hugging the sort of 1 to 6 month part of the curve in the form of treasury bills. And, maybe moving away from that notion. If you look at treasury bills even today, you can go out to 3 months and yield 5%. But now, unlike just a couple of weeks ago, you have a 4 handle on your treasury bills. So you may want to be thinking about moving out the curve, maybe not to 10 years or 30 years, but certainly 2, 3, 4, 5 years.
Because you think we've topped out? Do you think we've, in terms of rates along the yield curve, the U.S. yield curve, do you think we've, the idea of 5 or 6, which we were talking about not so long ago, more consistently, do you think we've topped out here and that where we are right now, or where do you think we are, when it comes to the 2 and the 10 in particular?
I mean, the short answer is I don't know, but I do think that it seems as though the balance of risks would suggest more incremental weakness in the economy and more incremental weakness in employment, which would suggest that nominal rates could come down. But what I do know, just by looking at the break-even inflation rate relative to, let's say, the nominal 10-year Treasury rate, is that 10-year Treasuries are not particularly expensive right now. They're not uber cheap, but within the context of the last 2 years, they're quite attractive. And so it gives some confidence to sort of say, extending duration right now with the long-term inflation rates where they are, 10-year break-evens are only 2.09, 210 on Bloomberg Terminal today.
Yeah.
It's sort of attractive.
Okay, we got CPI tomorrow. We got retail sales coming on Thursday. Gosh, we have even more. We have quite a bit. We have so much economic data this week.
There's some interesting ones, yeah.
Yeah, we do. Aaron, just 30 seconds. What could surprise to the upside and sort of like shatter the soft landing narrative? 30 seconds.
Well, of course, if CPI is for some reason hot, which the market is not anticipating, I mean, the Treasury market's off, 5-7 basis points today, meaning prices are higher, yields are lower, and PPI, was on the softer side. That would maybe bring some pause, but it doesn't make a trend. I think the trend, if you look at core inflation, headline inflation, has been downward. A slightly elevated CPI number probably wouldn't spook the market too much. I still think September cut is in the cards. I think retail sales would be a surprise if it really overshot, given what we're seeing in earnings, whether it was today with Depot or consumer staples companies. There's a lot of caution on the consumer front right now.
All right, good to keep in mind as we go through those data points. Aaron Kennon, co-founder and CEO at Clear Harbor Asset Management, joining us as he has before from Stamford, Connecticut. They've got about $1.5 billion in assets under management.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.